Next, we have Allcargo Logistics, the next management on the show. Steady set of the second quarter numbers. Net profit, of course, was aided by tax credit, but margin did decline on a year-on-year basis. Ravi Jakhar, the Chief Strategy Officer, joins in now. Ravi, let's start with the current international scenario. I mean, what's the near midterm outlook for freight rates, as a result of which, what are you penciling in terms of volumes and outlook for the remainder of this year?
Yeah, first of all, a pleasure being on your show. And this quarter gone by, as we have reported in our earnings as well, was quite a good quarter. We had the highest ever monthly volumes during this quarter. We saw that the trade momentum is now reviving. We have seen improved volumes across the world. We have seen the high growth markets in Asia continue to do better as compared to the last year. And now we have seen marginal, though slightly volatile improvement in Europe as well. We believe that the changing geopolitical landscape could potentially have an impact there. And if the geopolitical tensions were to be de-escalated over the coming 6 months, that could potentially revive the European economy, particularly since with the rate cuts, inflation has already been in control in Europe, and there is a greater disposable income which is available in the hands of the consumer. So overall, we believe that the economic environment should continue to improve. On the freight rates, we expect them to remain range-bound. There's supply coming in. At the same time, there are also ships going for scrapping. There's chances of de-escalation of tension, which means that the supply constraints could go away. But at the same time, that would also be coupled with economic revival. So these are balances in place with which we believe that freight rates should remain range-bound. But what we are particularly happy is that across all the businesses, our strategies have been playing out, and we are happy with the performance of the quarter gone by.
So let's talk about a couple of details then. One, what were the average freight rates in the third quarter? How do they compare with H1? And secondly, what's your target LCL volume for the full year?
Yeah, so speaking on the international business, freight rates in our business is largely a pass-through, and therefore it does not really make much impact. What makes an impact is how well our containers are utilized. And the container utilization was marginally improved during this quarter on the back of better volumes, and which is why, if you look at our international business, which is represented by EQ Worldwide, we have seen on an year-on-year basis, there's almost a 57% improvement in EBITDA for the quarter, and that's largely the international business excluding India. And that's been driven by improved utilization. So we believe that if we can continue to see a positive momentum in volume and we can improve the utilization, we can reduce the transshipment, which is all an outcome of improved volumes. We should continue to see improved margins in terms of gross profit per unit of volume that we handle. Gross profit as a percentage of revenue is a bit of a misnomer in our business, considering that a large part of ocean freight rates are largely a pass-through.
And volumes, what are you targeting, the LCL volume? For the second quarter, they were up, around 4%? So
about 5%. Yeah, so if you look at the volumes, about LCL is about 5% up, FCL is about 7% up, air freight is about 13% up. That's on the international business side. And before I dive into domestic, let me conclude here. I believe that we would continue to outperform the trade market growth by about 3 to 4%. And we have seen that in the last year, it was negative and we were kind of holding flat. Now that the market has become flat to 1%, we have seen 4 to 5% growth. Long-term average for LCL growth is about 6% for the last 8 to 10 years, and we believe that we could do 3 to 4% over that. So that's a delta that we have always been guiding towards, and we believe we remain confident that we would continue to outperform the market growth. But the market growth itself could be volatile, ranging from a couple of percent growth to recovering back to 6% normal growth as the economic situation improves.
All right, 2 quick points before we let you go. One, expected growth in contract logistics. You've gotten a bunch of new clients and you've increased your revenue per client in that business as well. And that's reflecting 46% growth in your overall revenue in contract logistics in the second quarter, with margins at around 5%. Where does this number settle for both margins as well as growth?
Yeah, so I think, contract logistics business has significant opportunities to multiply. And you have seen over the last 2 quarters, there's been a sequential growth quarter on quarter of a significant proportion. Year on year, like you rightly pointed out, it's almost 46% growth in revenue. This is on the back of 2 things. One, we are very successfully expanding into new domains. What used to be a chemical contract logistics business a few years ago, now chemical is just about 35%. The largest segment for us is now e-commerce, and we are rapidly expanding into quick commerce business, which is more than 10x in the last 3 years for us. This is managing their inventory, warehouses, and even some dark stores. And that's a business which we believe would continue to have positive momentum. We also had non-restriction on chemical transport, which went away during the quarter gone by. So that's another set of opportunities. So if you look at the contract logistics business, we have been able to maintain profitability despite a focus on growth. And what I mean by that is when you're focusing on growth, you tend to have higher white spaces. Historically, what used to be about 4-5% a couple of years ago, we are now at a double-digit white space, but that is something which allows us to, invest in capacity and grow the business rapidly. We would continue to have that approach for the next couple of years as we see immense opportunities in this business across e-commerce as well as other domains like auto and engineering, which have also done very well for us. And on the chemical logistics, we continue to remain the market leaders, and we will maintain that position strongly. So overall, a very promising opportunity on the contract logistics business. And express logistics, which is the other domestic business also, like you would have noticed, we had the highest ever business in the month of October, and we are seeing strong momentum in that as well on the back of improved service levels at Gati.
So does it turn EBIT positive in the remainder of these 2 quarters? The express distribution business?
Express distribution should turn towards the EBIT positive with the performance that we are seeing.
All right.
All right, we'll leave it there. Thank you very much for joining us. Interesting conversation, and hope to speak with you soon again. Thanks indeed.